FX sheet is our Monday marathon. As you all saw, well, the logo has changed in terms of the David Dotan show. We switched it up. Okay, hopefully I'll be able to speak today. We have a long session ahead of us, so it'd be nice if I'll be able to talk normally. That's great. Okay. So, Monday marathon, what are we going to do? We're going to get rolling here. We're going to talk the way we go here about things here is we go through the news, then we go through the 20 something pairs, okay? So every Monday the key is to analyze all the pairs, break down what we're interested in. Pairs that we're interested in last week, we're going to also analyze from top from down to top, okay? From up to top. All right? Clearly my mind needs to wake up. All right? So anyways, we're going to roll here. What's going on, all right? First off, we got elections in a week. Okay, elections in a week. Markets right now, we're trying to figure out what's going on. Okay, we have not much strength across the board on any of the pairs. Okay, we do see some weakness and we're seeing some minor strength. Okay, so let me go across here. All right, Swiss Franc's at a 1.1 in terms of positive strength. Euro's at a 0.6. Kiwi's at a 0.6. Okay, in terms of positive strength. All right, now we're going into the negative side. Yen is at a negative 0.2. Gold's at a negative 0.7. Aussie's at a negative 1.7. Pound's at a negative 2.2. CAD's at a negative 2.6. USD's at a negative 2.7. Now, what the hell's going on? Because we have low numbers. Sometimes you see positive 3s, positive 4s. Now we're in the 1s. We're in the negative 1s. Okay, what the hell's going on? Well, there's a lot going on. All right, the market's trying to wait. The upcoming elections here on November 3rd is going to be huge for the market. Okay, as mentioned, we do not, as far as me, I do not care who wins. I do not have the power to decide who wins. So instead of focusing on things I cannot control, what do I tend to do? I focus on how I can react to the situation. Okay, so what's going to happen here is two things. Either Biden's going to win or either Trump's going to win. And how will the market react to that? Well, Trump is very pro-business in many ways, okay? And not that Biden's not, but he plans on making some shifts, okay? We're already one term into Trump. We already know what to expect from him. The market already knows what to expect from him, okay? So what I believe will happen, and I don't know if this is the case, but if Biden wins, I believe liquidity will leave the equities market to wait for that shift in what's going to happen, okay? And if Trump wins, I think we'll see a continued boost in the equities market. Now, whether this is going to be long-term, I do not know. Because the key here is this. The economy's hurt, okay? Stimulus does not mean it's long-term recovery. Stimulus does not mean that it has healed. It's just patching up the wound. It has not healed the wound, okay? So as far as putting in every dollar that you have in the equities market, assuming it's going to go up, I wouldn't suggest that, okay? So anything, if we find any entry, it has to be low risk, okay? Elections are coming up. It's a massive deal, all right? Now, the equities market as well is super flat. We're not seeing much movement there. If anything, we're seeing a decline to the downside. Why is that? First off, U.S. equities are overpriced, okay? You're not getting a discount on any buy right now. You're buying at a high price. And that's why we've seen, part of the reason why we've seen weakness in the U.S. dollar, because liquidity has been happening from the equities market and moving into more better deal investments in, for example, the European stock exchange, maybe the Japanese stock exchange as well, okay? So we have that. All right, we have elections coming up, we have U.S.-China tensions, and we also have the fact that they are having a hard time controlling COVID. That's why we're seeing weakness in the United States, in the USD. However, we're seeing that across the board. We got Europe, we got Italy, France, we got Spain potentially going into lockdown. France had apparently 50,000 new cases in one day. U.S. has a 32 point markup in terms of COVID cases, okay? So, and we're not even into prime winter yet. We're only, late October here. Wait till we get to this January, January, February type seasons where the immune systems are extremely low. So what does that mean? Does that mean that we may have an opportunity to buy at a cheaper price? Yes, that means we may have an opportunity to buy at a cheaper price. So What's the best thing to do right now? Buy equities at an extremely overvalued price, or are we going to wait, knowing that that virus cases are increasing, knowing that lockdowns are going to happen? That's right, we're going to wait. Okay, what we want to do is we want to accumulate our cash and we want to buy. What have we been talking about since the first spike after COVID? That's an impulse move. That's a market reaction, right? What we need to wait for is what the double confirmation, okay? Because what ends up happening is that smart investors, okay, are increasing price, selling it to dumb investors at an overvalued price. Eventually, things cannot go that way, especially as virus cases increases. We will see a move back to the downside, where then who are people like us, who are smart investors, we will then buy at a more discount valued price. Okay, so in summary, what I'm trying to say, with the elections coming up, we have to be very, very careful. If we do find any new entries this week, it has to be low risk. It has to be under the assumption that we have a low chance to win, even though we do our proper analysis, proper price action confirmation, all that stuff. Even though if everything checks, we still want to keep it low risk. All right, so we're going to take it to the charts here. Okay, and we're going to start on Euro USD, which is the first pair that we start on. Okay, monthly time frame. Alrighty. Okay, Euro USD on the monthly time frame. What do we see here? Lower lows. So here's our monthly downtrend. What is this? Monthly upper zone, monthly lower zone, weekly mid-range zone. Here's a push, exhaustion, continuational push. Excuse me, team. I don't know about you guys, but I don't drink enough water. Sometimes I'll go throughout a day and I'll be like, hey, did I drink any water today? God, you're supposed to drink like 6 liters a day. I don't even get maybe 2 liters. Okay, so push to the downside, exhaustion, continuational push, price failing to break previous low. Okay, this was fundamental reason. There was a fundamental weakness in the euro, which is why price made its way to the downside here. As things start to change, they had fundamental and technical support back to the upside. The key here is that price failed to make an impulse move off its weekly mid-range zone, telling us that there's just a tremendous amount of buy pressure. Now, what's our fundamental direction here? Euro's at a positive 6 and USD's at a negative 2.7. So our fundamental direction is still to the upside. And why is it likely going to continue that way? Because, well, first off, at least for this week, it will continue this way before elections. And the reason why is because the euro is seeing a massive spike in cases, just like the United States. And the United States has, on top of that, elections coming up, US-China tensions. There's other reasons why the USD is weaker than the euro, and why I believe that it will actually stay weaker, at least for the coming week. And then potentially, depending on how the election go, what the outcome is, we'll see. Again, if Trump wins, I believe we'll see some minor strength in the USD. We'll probably see some stimulus money coming back into the markets. If Biden wins, I believe we're going to see some additional weakness in the USD as liquidation starts to leave the US economy and moves into other safe haven investments. Now, one of the things that I should say here that's interesting, okay, is that people are not investing anymore. What's interesting is this. Usually when one market is moving or is overvalued, money comes out and goes in, right? What's happening now is even the rich, right? Because when you have a lot of money, the last thing you want to do is you want to keep it doing nothing, okay? Let's say, we're talking about inflation at 1.2% a year, right? So let's say you are extremely rich and you have, $100 million in the bank doing nothing. I mean, you're losing 1.2% a year on $100 million just on inflation. You do not want your money just sitting there. You want your money working for you, right? But what's happening now is the rich are saying, fuck it. I'll take my 1.2% hit a year on inflation. I'm just going to keep my money safe. I want to keep it in the bank. I don't want to do anything. So it's a little bit different, and we're going to see how that changes. A lot of people are just taking out the money and saying, keep it in the bank. I don't care if I'm losing 1.2%. Just want the cash. That's all they care about. So that's interesting. We'll see how that moves. All right, so Euro USD breaking above our weekly mid-range zone to the upside. That's a push. Okay, what's after a push to the upside and exhaustion to the downside? So let's take a closer look here now. All right, so here's that higher time frame push breaking to the upside. Here's exhaustion. Why did we identify a 4H upper zone and a 4-hour lower zone? Here's horizontal sell pressure meeting horizontal buy pressure. So what do we know? We know our fundamental direction is to the upside. We know that we're only looking for technical entries to the upside because of that. So what we've identified is essentially battleground. We know that at our 4H upper zone, it's our last area of significant sell pressure before then sell pressure at our higher time frame downtrend. So what we're trying to do is very simple. We're waiting for price to battle and break the buyers to break this sell pressure to the upside. Okay, once we see that push, what's after a push? Exhaustion, then we're waiting for price action entry confirmation for a continuational move to the upside. Now, are we going to be on top of the charts just like hoping and praying that something happens now? No. Why? Because we expect low movement. We expect there to be less activity leading up to, the elections, all right? So what can end up happening is we could be, in terms of traffic light, we can be in the red for the upcoming week, and then adjustments will happen, and that's okay. That's what's going to happen, all right? And I gotta say this, many traders, sometimes they can get through being relatively successful. I'm talking about amateur traders. Sometimes you find like some sort of, I spoke about this yesterday, being able to trade based on knowledge and trading based on memory. It's a big difference. A lot of amateur traders trade based on memory, right? But the thing is that this is where they get hurt. Sometimes traders that trade on memory, if they are on the right proper strategy, sometimes they can succeed. But in the long run, they get hurt. And why? Because during these times they're trading. During these times they're looking for 5-6 entries a day, and they don't understand why there's volatility. They don't understand why the fundamental direction is flat. They don't know, right? Because they're not trading based on knowledge. They're trading based on memory. So this is around the time where people start to blow their accounts. Okay, so I just want to let you know. All right, push, exhaustion, price action entry confirmation for a continuational push to the upside, moving on from Euro USD. Now, because we're on our marathon session, okay, meaning we're going through every pair on the chart that I trade. All right, we're gonna go at my pace here. All right, now for those of you who are part of the Forex Gentleman community, you will be getting an analysis, of course, on these pairs and updates on the signals. Okay, and we'll be making some changes next week in terms of the David Dotan show, which will be live on YouTube, and then we're gonna do the second half of the show, which is only for member only access. Okay, so on the monthly time frame, here are our monthly zones, horizontal area of buy and sell sensitivity. But where's price trading? In between these two monthly zones here, so we're going to pay attention. Okay, so what's in between our monthly upper and monthly lower zone? That's right, weekly zone. Sometimes it's a weekly upper, sometimes a weekly lower, sometimes it's just a weekly mid-range. In this scenario, it's a weekly upper and lower due to horizontal sell and horizontal buy sensitivity, okay? Now, price is seeing horizontal sell and buy sensitivity from its monthly upper and monthly lower as well. So we are in a higher time frame level of consolidation. Okay, price made its way to the downside as we saw a tremendous amount of weakness in the euro. Okay, as fundamentals started to change and we had technical support, we saw a push back to the upside. So let's take a closer look here. All right. So what's this? Push, right? Because buy pressure beat a significant area of sell pressure at its weekly lower zone. What's after a push to the upside? Exhaustion to the downside. What's next? Continuational push. Why is this a push? Because buy pressure beats sell pressure at its weekly upper zone. What's after a push to the upside? Exhaustion to the downside, and we're looking for what? Continuational move, right? That's what we're looking for. So our higher time frame flow is telling us to the upside. But what's our fundamentals telling us? Well, euro's at a positive 6. Okay, we have Canadian dollar at a negative 2.6. Now, what is going to happen with the Canadian dollar? What is going to happen with the Canadian dollar? I want you to take a moment to think about this while I take a sip of my coffee. Weakness. Why? COVID spikes. Why? Shutdowns, lack of demand in crude oil, supply demand, right? Supply high, demand low, price goes down, which means what? Canadian dollar devalues because it's strongly correlated to the price of crude. It is our major net exporter, okay, here in Canada. So Canadian dollar likely going to see continued weakness, which means what for the euro, even though we also see weakness in the euro. Fundamental direction is still to the upside, right? So we're only looking for technical entries to the upside. All right, so Push, exhaustion, push, exhaustion. What's next? Continuational push. All right, so now we're on the daily time frame, and this is our monthly upper zone. This is our weekly zone. Okay, so let's identify our daily mid-range, which is here. Let's change the color because usually that's our 4H color. All right. Now, you could do what I did before, which was just for visual purposes, identify high, identify low, but you can understand that that's there anyways because we've identified our monthly upper zone and our weekly mid-range zone. Okay, so let's just remove this for visual purposes. Okay, let's talk flow, right? Higher time frame push, higher time frame exhaustion. Okay, what's important about this exhaustion? Double confirmation, right? This is impulse one. This is the first contact at completion of exhaustion. And what is this? Impulse move, stop losses, take profits, buy limit orders. Okay, then we see a retest, and what's next? A re-injection of buy pressure. Now, in this scenario, and I mentioned this last week, in this scenario, buyers actually reached its monthly zone to the upside before coming back for double confirmation. However, majority of the time, that's not the case. Okay, many times after the impulse move will not reach its next zone. Okay, so we have double confirmation on the higher time frame, impulse one, impulse two, second injection of buy pressure. We know our fundamental direction is to upside, so we're only looking for technical entries to the upside. Now, again, here's our monthly lower zone, here's our weekly lower and monthly upper. What is the zone in between that? That's right, our daily. And what would be in between our daily and our weekly? That's right, our 4H. Now, because we've identified our daily mid-range zone, we know that this is our last level of buy sensitivity, or I guess, obviously there's 15 minutes. What I want to make this clear because I have had questions. So excuse me for stopping the flow. I'll get back to this in a second. I've had questions about this, so I want to talk about it. Okay. We have our monthly zones. Then we have our weekly zones. Then we have our daily zones. Then we have our 4H zones. Then there's 1 hour zones, 30 minutes, 15 minutes, even 5 minutes. Every time frame has its area of sensitivity. But the higher the time frame, the more respect we have at that area of sensitivity. So when I say, team, if buy pressure breaks sell pressure at its daily mid-range zone, then it has free range to its monthly upper zone. What I mean by free range is I don't mean that there's no area of sensitivity on the lower time frame. I just mean that if buy pressure is able to break its daily zone, it will be able to break likely its 4-hour zone and its 1-hour zone. Why? Because buy pressure needs to work a lot harder to break its higher time frame zones. So let me ask you a question. If buy pressure is able to break its weekly zone to the upside, will it have an easier time breaking its 4-hour zone? Yes. If it breaks its 4-hour zone, will it have an easier time breaking its 5-minute zone? Yes. Now, here's another question. If buyers break its 4-hour zone to the upside, will it have an easier time breaking its weekly zone? No, because the 4-hour zone has less respect, less sell pressure than the weekly zone. Okay? You got to think about it like this. As mentioned, zones are like a battleground. Remember, Braveheart, buyers and sellers running at each other. Either buyers are going to win or sellers are going to win. Now, there's different lines of battle, right? When you read history, there's big battlegrounds, and then there's relatively less significant battles. Okay, that's what the monthly zones are. The big battlegrounds. There's a ton of sellers, ton of buyers. The 5-minute, small battleground. Okay. The respect increases the higher the time frame. So when I say again, we're waiting for the push, exhaustion, and we have high probability and free range to our monthly upper zone, I'm not saying that price won't be breaking or reaching lower time frame zones. I am saying that if it has the strength to break its daily zone, it likely has the strength. The probability is, nothing is certain. The probability is it has the strength to break its lower time frame zones. Okay, done. All right, so higher time frame push, exhaustion, double confirmation for a continuational push, fundamental direction to the upside. So we're only looking for technical entries to the upside. Okay, so now we're taking it to the 4-hour time frame. We know that buy pressure is now testing our mid-range zone, right? That's expected. Okay, fundamentals are to the upside, so we're expecting this. What's after a push? An exhaustion, a reload, right? So we're looking for price action and entry confirmation before continuational push for free range to our monthly upper zone. Okay? All right, next one is going to be Euro Aussie. All right, we're going to take this pace a little bit faster. Euro Aussie, we're preparing for a potential entry. Okay. Euro positive 0.6, Australian dollar negative 1.7. What does that mean in terms of fundamental direction to the upside? Okay, so we're only looking for technical entries to the upside. Okay, we're seeing weakness across the board as well. It's not like the euro is strong, and it's not like the Aussie is significantly weak. Okay, so we must see as well technically sound trades. Okay, so on the monthly time frame, looking at top down, we see a strong move to the downside, weakness in the euro. Okay, since 2012, we're seeing strength in the euro. We have an uptrend here with higher highs, but really what we're focusing on is in between what zones price is trading at, right? So we have our 2 monthly zones here. Price is trading in between here now. This is where we need to pay attention. All right, so what's in between? What zone is in between our monthly zones? That's right, our weekly zone. Right? That's what we have to identify. So what did we identify here? Did we identify a weekly upper and a weekly lower, or just a weekly mid-range? That's right, just a weekly mid-range, because we didn't have a weekly upper and a weekly lower. I have no bias. It's not like I look here and I'm like, I want a mid-range or I want an upper and a lower. It's not like that. I place based on what I see, not what I want. Okay, so now let's talk about flow. Okay, we know fundamental directions to the upside. So here's a push, right? This is when the euro was gaining a ton of strength as the virus is spreading in Asia, right? Australian dollar is significantly correlated to the Asian economy. So that's a push to the upside. What's after a push to the upside? Exhaustion to the downside, which then became a push, right? Exhaustion became a push. Okay, we failed to see an impulse move back to the upside. Okay, instead what happened? We just saw price make a continuational move, telling us there was a tremendous amount of weakness in the euro compared to the Aussie. Now, since June, we've had pricing consolidation, right? Horizontal sell pressure from our weekly mid-range, confirming the sensitivity and the importance of our weekly mid-range, and horizontal buy pressure at our monthly lower time frame. Okay, so as we take it now to the daily time frame, what are we seeing? What is this? This is a push to the upside, right? And why is this a push? Because buy pressure beat sell pressure at this significant area of battle. So after an army beats one army, are they just fresh, or do they need to reload, regroup, fix the injured? Okay, yeah, that's right. That's why we have what I call exhaustion. Okay? All right, so that's what's happening right now. At exhaustion, buyers are looking for that reload, an injection, new support of buyers to then make its march to its next battleground. Okay? So now let's look quickly here at price action. I'm going to move this over just so you can see. All right, we're just going to move this slightly. All right, so Euro Aussie, okay, push. Exhaustion. What are we seeing here at exhaustion? First off, the one thing I can tell you right now, we are on the daily time frame, but I can see this when we go to the lower time frame. This is a strong exhaustion, so potentially I'm looking for double confirmation. But what I do see here is a battle between buyers and sellers. Sell pressure made a push to the downside, buy pressure made a push back to the upside, then sell pressure made a move to the middle. Okay, same here. So we are seeing buy protection, but we are also seeing sell protection with these pin bars. So let's take it now to the 4-hour time frame. So what do we see? Take a moment. I do these every so often. Take a moment in this area to identify what is important and what we waited for before a continuation move to the upside. Just another moment. Take it. All right, it is what? Strong exhaustion with significant double confirmation. Even though it's not just a straight shot to the downside, take a look at these pushes, okay? We're talking about significant strength. Strong push, So what happens when we have a tremendous amount of sell pressure reach an area of significance? Impulse move. That's right. Market reaction, stop losses, take profits, buy limit orders, market reaction to area of sensitivity. Now what's happening? Retest, okay? So here's buy pressure 1, but that doesn't mean a change in direction. We know that. That's impulse. What's happening now? Potential second injection. Okay, so that's good. Potential double confirmation. Now, this is a potential entry to the upside right here. First off, if you want to see the full analysis on how we added our targets, go to Gentleman Markets, okay, for the members out here. And you'll see how we added our targets. Okay, I'm going to be putting this, there is a potential, how do I say this? I don't want to confuse you. Sorry, I'm like rehydrating and dehydrating myself with coffee. Okay, so I wouldn't be upset if you entered at this pin bar. This is not a bad buy to the upside on Euro Aussie. But what do we have coming up? We have elections. We have high risk. Okay, so I want to be a little bit safer than usual. So now I'm on the 4-hour time frame. Do I see an area of sensitivity that I would like buy pressure to break on the lower time frame before I find an entry to the upside? Yes, I do. And what is that? Right here, right? 4H zone. Buy pressure here. Sell pressure, right? We saw push, exhaustion, push, impulse move ended here. So we know that this is a 4H area of sensitivity. So for me, and I will make this adjustment on the signals channel here on the Gentleman's Market, but for me this is a scenario. I'm going to be waiting for the push breaking this mid-range zone to the upside, exhaustion, and then I'll be looking for price action and entry confirmation for continuational push here. It just gives me that little extra support telling me that buy pressure was able to break what we identified as our 4H mid-range zone. Okay, obviously our entry will adjust, which means our stop loss will adjust. But again, for those of you who are, let's say you can't be in front of the charts, let's say you are trading a lower, account size, this would be an okay buy, right? Now, quickly, I just want to mention this. Okay, what is the fundamental reason why this would be okay? Okay? Fundamental. Well, we know that this is an impulse move, right? So let's think about this, right? For 1 second. When price makes its way down at exhaustion to area of significant sensitivity, why is this an impulse move? Again, stop losses, take profits, and limit orders, right? So all these orders in, out, are taken out, are executed, right? So at the second contact, this is very important, this significant pin bar, because what happened was this sell pressure tried to penetrate our weekly zone to the downside, and buy pressure moved back, push price back up to close at the pin. But the reason why this is important is that buy pressure is the second injection of buy pressure, not just buy limit orders and reaction from take profits and stop losses. That's why a significant pin bar at double confirmation would be an okay entry to the upside. Okay, so if you did place an entry to the upside here, team, not upset with you. For me, someone who trades a larger account, who honestly, I'm about my win percentage. Push, exhaustion, continuational push. Okay, so instead, I'm looking for entry over here rather than entry down here. Okay, that's the only difference. However, as mentioned, if you are a member of the team and if you did enter here, you will likely succeed. And I'm not, I think that's a good entry for you. All right. Euro Swiss Franc, monthly time frame. Euro is a positive 6.6, Swiss Franc a positive 1.1, which means what? Our fundamental direction is actually to the downside, since the Euro is weaker than the Swiss Franc. However, does this mean that our fundamental direction is extremely clear? No. What's the difference between a 1.1 positive and a positive 0.6? Not much, right? There's not much, especially with everything going on now. Fundamentals can change. So we have to keep that in mind, that fundamental direction is actually flat, in my opinion. which means technicals take the cake. So we monthly upper, monthly lower. Here's our weekly upper, weekly lower. And as you see, this doesn't really look like our normal charts. That's because Euro Swiss franc is extremely ugly. Okay, this is the ugliest of the monthly time frames. All right. However, again, we don't place things where we want it to be. We place it where they should be. So why is our weekly upper zone and weekly lower zone not exactly in the middle of our monthly zones? Well, because this is where their sensitivity is. Okay. So, starting in July of 2018, we saw weakness in the euro against the Swiss franc. Okay, so we have push, exhaustion, push, exhaustion. What's next? Potential continuation push. We have a higher time frame downtrend. Here's our weekly upper, weekly lower. What's in between our weekly zones? That's right, our daily. Okay, let's take it to the weekly for a closer look at what's going on here. Remember, we would need a significant technical marvel for us to enter here in one direction or another without any fundamental direction, okay? Because I need to see something that I really like for me to find an entry here. All right, so on the weekly time frame, what are we seeing? What I do like here, excuse me, another sip. What I do like here is this: significant horizontal sell pressure, okay? At continuational push, because here we had push, exhaustion, continuational push. At continuational push, price definitely tried to break this daily mid-range zone to the upside multiple times. We have multiple points of buy pressure trying to beat sell pressure, and sell pressure pushing price back to the downside, which tells me that price may make its way back to its weekly lower zone. Okay, again, euro is weaker than the Swiss franc. Fundamental direction is to the downside. Okay, so, excuse me. Jeez. Here's horizontal sell and buy pressure. Here's our mid-range zone. Where? This is our 4-hour mid-range zone. Why? This is our daily. This is our weekly. This is our 4H. So let's take a closer look at this area here on the daily time frame. Okay, we are on the daily time frame. We know that there's horizontal sell pressure. Here's horizontal buy pressure. So what is this? Consolidation, right? What's happening now? Potentially price is breaking consolidation to the downside. Okay, but here's the reason we don't like to trade when there's no fundamental direction. God, not feeling the greatest. Okay, so here's a push to the downside, okay? What's after a push to the downside? Exhaustion. Here we see a bearish engulfing candle for price action confirmation. Okay. You could find entry confirmation somewhere in here, I'm sure. But the reason why price hasn't continued to the downside is because there is no fundamental direction. Okay, take a look. Bearish engulfing candle on the daily, bearish on the 4H. What's happening now? Are we seeing any continuational move? No. There is a significant battle going on because we don't know who's stronger than the other. Okay, we need fundamental direction. I need to make this clear. This trading now is not like it was 5 years ago. You need a fundamental you need that direction. And I'm not saying that you didn't 5 years ago, but you could have got away with a technical entry like this. You could have. Not anymore. You don't get away with that anymore. Okay, Euro Swiss franc, moving on to Euro Yen. All right, Euro positive 6, Yen is at a negative 0.2. Is a positive 6 and a negative 0.2 significantly different? No, it's not. Also, are we expecting the euro to continue to have strength over the yen? Maybe not. Yen is a safe haven status, even though it's not the strongest of the safe haven status. It is a safe haven status and the second strongest behind the yen, other than a gold and right now Bitcoin, but I'm talking about in terms of currency pairs. Okay? So we have Swiss franc and yen. Okay, so what happens when the virus increases? What happens when lockdowns happen? Liquidity goes into safe haven status, which will gain strength in the yen and weakness in the euro compared to the yen. Which means what? Even though our fundamental direction right now is to the upside, does that necessarily mean that that's going to be the scenario? No, it's not. We have to look at what's happening now and think, is it going to continue to happen in the near future and then in the long term, right? So in the long term, maybe. In the near future, I don't think so. All right, so what do we see here on the monthly time frame? Here's lower lows, here's higher highs. That's a squeeze, right? A wedge. Price is either going to break to one side or the other. Here's a monthly upper zone. Here's a monthly lower zone. Here's our weekly mid-range zone. All right, that's just area of battleground. So let's talk about what's going on right now. All right. Again, fundamentals to the upside, technical entries only to the upside at the moment. However, again, fundamentals are pretty flat. So push, exhaustion, continuation push, price shot back to the upside. Okay, as we take it to the weekly time frame, here's a push, exhaustion, push, exhaustion. What's next? Potential continuation push. Let's take it to the daily now. Okay, what's in between our daily zone and our weekly, or our daily and our daily and our monthly? It would be our 4H, right? Because we've already identified our weekly zone. Okay, so here's our 4H upper, here's our 4H lower. Push, exhaustion, potential continuational push. Do we believe that the euro will have short to midterm strength, especially with elections coming up, with the fact that France had 50,000 new cases in one day? Do we think that the euro will continue to see weakness? No, we do not. So do we believe that we have an entry to the upside? No, we do not. Do we have an entry to the downside? No, we do not. Because we do not assume that the yen will increase in strength. Right now, the fundamental direction, even though it's minor, it is to the upside. So we eliminate any potential entry to the downside because we do not assume, we react. Okay? And move to the upside, right? We have to predict, we have to identify, we have to break down what's going on fundamentally by understanding how pairs react fundamentally. And we can say that yen will likely gain strength as countries go back into lockdown. Okay, so euro yen, I'm not interested. All right, euro kiwi. Monthly time frame, monthly upper, monthly mid, monthly lower zone. What's in between our monthly zones? Weekly. Okay, what's in between our weekly and daily? 4H. Okay, so talk about fundamental direction. Euro is at a positive 0.6, Kiwi is at a positive 0.6. So what's our fundamental direction? Clearly nowhere. All right, so we have to see, is there something significantly attractive technically? We will wait to find out. So let's identify, even though here's our monthly upper, mid, and monthly lower, we have to pay attention to where price is trading. So it's trading in between our mid to lower zone. We have horizontal sell pressure, horizontal buy pressure. That's higher time frame consolidation. But let's focus in more on the lower time frame now. Let's dive in. All right, so here we see price started to trade in consolidation in between its weekly mid-range and its daily mid-range. Okay, then we saw price make its way. Now we're likely going to see price go into consolidation between its daily mid-range and its monthly, right? We're likely going to see this because fundamental direction is flat. So who's going to be winning at our monthly upper zones? Sell pressure. Who's going to be winning at the daily mid-range? Buy pressure, because there is no significant reload or support since there is no fundamental direction. Okay, so Euro Kiwi, we're going to be in consolidation. If we look at price action right now, there's nothing attractive, okay? Nothing attractive. What is this? Higher time frame, pin bars, right? Pin. Buy pressure making its way, and boom, sell pressure pushing. Buy pressure, boom, sell pressure pushing. Okay, that's what's going to happen at area sensitivity. Euro Kiwi, not interested. Okay, Aussie CAD is next. Aussie, negative 1.7. Canadian dollar, negative 2.6. Australian dollar right now is stronger than the Canadian dollar. Fundamental direction is to the upside. What's our fundamental direction going to be in the near to short term? Upside. What's our fundamental direction going to be in the mid term to long term? Probably upside. Why is that? Because even if the Australian dollar is weak, the Canadian dollar is correlated to crude. So as countries unanimously become weaker, okay, or in terms of the virus, increasing and economic outlook becomes weaker, supply, demand, and crude drops, right? So in terms of a move, only to the upside, all right? So Aussie CAD on the monthly time frame. Monthly zones, okay? Let's identify where's price trading right now in between these two monthly zones. So that's why we identified our weekly upper and our weekly lower. So before we take it down, let's take a look here. There was significant amount of weakness in the Aussie, okay? as the virus was spreading across Asia, right? Then we saw the virus start to spread across the globe, and then the Canadian dollar start to weaken and the Australian dollar start to gain some strength. So we started to see a strong move back to the upside. Price was breaking monthly zones like it was his job, right? There was no sell pressure to the downside whatsoever. Okay, so now let's talk about flow. What is this? Push. What's this? Exhaustion. What's potentially next? Continuational push. Why is this acceptable to assume? Because fundamental direction. We can assume that the Canadian dollar is going to continue to get weaker as the virus continues to spread. Okay? So, higher time frame push, higher time frame exhaustion. Keep that in mind. Now, what's up with this exhaustion? Look at that. What's up with that? Significantly strong, right? That's double confirmation worthy, right? What is this impulse move? Explain to me in your head, because I can obviously hear what you're saying in your head when you talk to yourself. Tell me what's going on here. Why are we seeing an impulse move to the upside? Take profits, stop losses, buy limit orders, okay? Area sensitivity, market reaction to that area. Now, because of the strength of this exhaustion, I like to see double confirmation. So there's two scenarios that's going to happen. Either price is going to come back at some point now for double confirmation, right? Meaning, even though it looks like it's breaking now on the daily time frame to the upside, there could still be easily a stop hunt on its way back down and then come back for a higher time frame double confirmation. Or price is going to make a push, exhaustion, and find a reinjection of buy pressure here rather than that previous low. So we're going to react at completion of exhaustion to what happens, right? So let's take it to the 4-hour time frame. All right, 4-hour time frame. Again, let's assume here price makes a push to the upside, right? Price makes a push to the upside, comes back for exhaustion, and then boom, sell pressure ends up breaking buy pressure back to the downside. What can we safely assume is going to happen? That's right, price is going to come back for a higher time frame double confirmation at previous low. Now, assuming price comes back for exhaustion and finds a reinjection of buy pressure, meaning entry confirmation, price action confirmation, then entry confirmation. Then what? Then it's fine. We're going to have an entry here. And where's price going to go? Its next level of sell pressure. Okay? So we're going to get an analysis on this pair for the members of the team. It's going to be on the Gentleman Markets community. For those of you who don't know, to sign up for Forex Gentleman, you got to go to forexgentleman.com, and then you'll be transferred over to the Gentleman Markets platform, okay, as of right now. Okay, so team, you're going to get analysis and a signal on this pair, and of course we're going to identify targets and then stop losses and all that good stuff. So Aussie CAD, we're going to stay patient on this pair, and we're going to find a nice entry hopefully after elections. Okay, Aussie USD. Again, another example of double confirmation coming up. Okay, Aussie USD on the monthly time frame. Here's our monthly upper, monthly mid, monthly lower. Push, exhaustion, continuational push, okay? What's in between our monthlies? That's right, weekly zone. So it's either a weekly mid-range or it's a weekly upper and a weekly lower. In this scenario, weekly upper, weekly lower. And what's in between our weekly zone? That's right, our daily, okay? Now, let me make this clear. Sometimes daily zones are in between, let's say, monthlies and weekly, okay? What I'm trying to say is this. If you've already identified your weekly zone, the next zone you place has to be your daily. You've already identified your weekly. So once you've identified your daily, what's the next zone you place on the lower time frame? It has to be the 4-hour, right? So just keep that in mind. Don't necessarily think about it as in terms of placement and where and how it should look. Just think about it. I've already added my weekly zone, so now I'm looking for my daily. And if you've already added your daily, then you're looking for your 4H and so forth. All right, so we saw a push to the upside. Why is this a push off our lower zone? Buy pressure beating sell pressure at our weekly lower, right? Buyers beat sellers at an area of battle. That's a push. What's after a push to the upside? exhaustion to the downside. All right. Now, here's that push, here's exhaustion, okay? What we can see already on the weekly time frame is that strength of that exhaustion. So now let's take it to the daily. All right, again, what is this? Significantly strong sell pressure reaching exhaustion. Here we have impulse 1. Tell me, in your mind, what is going on here? Why are we seeing a move to the upside? Market reaction to area sensitivity, stop losses, take profits, buy limit orders, orders being executed at area sensitivity. That's what makes an area of sensitivity an area of sensitivity, okay? The amount of execution of orders, whatever those orders are, buy limits, stop losses, take profits, just market entries, it doesn't matter. There's a lot of stuff happening at this level. That's what makes it an area of sensitivity. So that's impulse 1, okay? Boom, price made an impulse move to the upside, saw some sell pressure at its higher time frame downtrend or its lower low, as you can see here, which you identified, and is now coming back to the downside for double confirmation. We see a second injection of buy pressure. Boom, awesome. So now we know, look, price already took out its initial orders at its impulse move. Second contact, because the orders were already taken out and we're seeing buy pressure, that confirms that, look, there may be a continuational change in direction. Okay. Now what of course our fundamental direction is to the upside, right? I forgot to mention Aussie is at negative 1.7, USD is at a negative 2.7. Okay, so fundamental direction at the moment is to the upside, and that doesn't change until after elections. Now, what are we waiting for here? Very simple. Buy pressure needs to break sell pressure where? At its higher time frame downtrend. We know that there's going to be sell orders here, market orders at this area. So buy pressure needs to break this level with the push. What's after a push to the downside and exhaustion, and exhaustion to the downside, where then you can look for continuational push. Now, why is my entry so high up, David? Well, we spoke about this last time, okay? You can find 2 potential entries, okay? Let me just add this, area sensitivity. Before I do, what zone is after the daily? 4H. Here's our daily zone. We already added it, right? So even though this is our daily and our weekly, what's in between? That's right, our 4H. Okay, so here's 4H area of buy pressure, sell pressure. As you can see, horizontal sensitivity. Even though price on the 4H was trading above this level, this is a stop hunt, right? Why is this a stop hunt? Push. What's after a push to the upside? Exhaustion. Did we see a reinjection of buy pressure? No. Sell pressure broke back to the upside. What's a lower time frame? Stop hunt. That's right. Higher time frame. Pin bar. Let me just bring that there. Okay, in this scenario, it wasn't a pin bar. It acted as a bearish engulfing candle. Let's take it to the daily. Maybe it's a pin there. Okay, it wasn't a pin bar, but as you can see, doesn't necessarily, many times it shows up as a pin bar. In this scenario, it showed up as a bearish engulfing candle on the higher time frame. But what you can see is price actually did not trade above its downtrend on the higher time frame, and the higher time frame is where we give most of the respect. Okay, so what are we waiting for here, team? Well, there's 2 levels of sell pressure. Some of you may find entry here again, push, exhaustion. This would be a fine entry at price action, entry confirmation at completion of exhaustion. But for me, I'm waiting for price to break also this level of buy pressure, okay, with the push, waiting for exhaustion, okay, and then we're going to see buy reinjection of entry and price action entry confirmation here, because if buy pressure is able to break this level here, it likely won't come back for a full exhaustion. If price is to come back for a full exhaustion to retest its higher time frame downtrend, it will likely make its way back down at this level. Okay, so there's going to be potentially 2 entry locations on Aussie USD, and in my opinion, this will either get support or rejection based on election outcome. Aussie Pound. Australian dollar, what is our fundamental direction here? Australian dollar is at a negative 1.7. Okay, the pound is at, where's the pound at? Negative 2.2. Okay, so right now our fundamental direction is to the upside. Last week it was to the downside. That's why we're going to see a technical entry to the downside. But this entry is going to become invalid. The more I look At pound, at Aussie pound, the less I like it. Okay, and so we're gonna make this trade invalid, and I'm gonna explain why. Okay, here's monthly upper, monthly mid, monthly lower zone. What's in between our two monthly zones? Our weekly. Here's our weekly upper, weekly lower. So we identified battleground. Okay, what do we see here? We saw buy pressure off our weekly lower, off our monthly lower zone. As we take it to the weekly time frame, we can see here price move price. Okay, there was strength in the Australian dollar against pound, moving price back above our weekly lower zone. Buy pressure moving it back. What's after push to the upside? Exhaustion to the downside. Now, exhaustion to the downside. Now, we saw a continuational move. Now, let's take a look at this for a second, okay? What's important here, and the important thing to remember is when you see a continuational move at exhaustion, and that continuational move fails to break previous high, okay? As you can see, previous high. That usually means that there's a change in fundamental direction. All right, and there was. The Australian dollar started to see weakness against the pound, okay, and started to make its way back to its weekly. And what we said was, if price is able to break its weekly lower zone back to the downside with a push, well, clearly sell pressure has control. We wait for exhaustion and a continuation move to the downside. Now, fundamental direction was to the downside last week. Now it's slightly to the upside. But for me, I'm just not interested in this pair. I'm just not interested. I don't like the pound. I don't like the pound compared to the Australian dollar. Okay? I just don't like it. I don't know. I just don't like it. Okay? Aussie pound. Moving on, this becomes invalid. So on at gentleman markets, you guys will see this analysis. We're going to put it as invalid, meaning that we did not find an entry during that signal, okay, in that signal. Okay, Aussie pound moving on. Aussie yen next. Okay, Aussie's at a negative 1.7. Yen is currently at a negative 0.2, meaning that the yen is stronger than the Aussie, so our fundamental direction is to the downside, but we're not interested in this analysis, and let's explain why. Okay, so every week you must go through all the pairs, because even though I know coming into Aussie Yen that I'm not going to be interested based on my previous analysis earlier last week, we know that, well, we still have to analyze the charts. We still have to understand. It's important. It's important to go through all the pairs, because even if you're not going to find an entry on one pair, it may give you some information on another pair if they're correlated or inversely correlated. Okay? So Aussie Yen on the monthly time frame. Here's our monthly upper, monthly mid, monthly lower zone. Okay, what's in between our zones, monthly zones? Here's our weekly upper, here's our weekly lower. Pay attention to this downtrend as well. Okay, so let's take the weekly time frame. And as you can see, based on the monthly, this is not a sexy pair. Okay, it's really not a sexy pair. All right. So when we take it to the weekly time frame, here's that move strong to the downside as the virus was spreading across Asia, and then of course Asian economy strongly correlated to the Australian economy. Okay, as things start to spread across the world, okay, we saw weakness in strength in the Australian dollar, weakness in the yen. Okay, and now what are we seeing? Again, price move its way to the upside. There wasn't even an impulse move at its weekly lower. So in summary, here we have a push. Okay, here we have exhaustion. Okay, now why are we not looking for an entry? Can you identify this on the weekly time frame? You should be able to. Has nothing to do with price action. Has nothing to do with that. Take a second. This is more critical thinking. Okay, more of a critical thinking practice right now. Okay, on the weekly time frame, I could tell you right away why I'm not interested. Very simple. Where's price right now? Significant area of buy pressure. Why? Because price is trading above our weekly lower zone and above our higher time frame downtrend. So if price was to make its way to the downside, even fundamentally, do we think it's just going to have a clear break? No, we do not, because we know that there's a tremendous amount of buy sensitivity here and likely in between. Okay, because there's not much space between our weekly lower zone and our higher time frame downtrend. Okay, so our fundamental direction is to the downside. Okay, to the downside as there's strength in the yen. Are we going to see continued strength in the yen? Likely. It's the second strongest safe haven status behind Swiss franc in terms of currency. Okay. Right now, Bitcoin, gold, Swiss franc, then yen. But yeah, in terms of currency, it's behind Swiss franc. So yen will likely continue to strengthen. Australian dollar will likely continue to weaken. And because of that, only technical entries to the downside. But because we only are looking for a move to the downside is the reason why I'm not interested. Because I know that there's a tremendous amount of buy pressure in this area. So good luck moving to the downside, because at any moment we could see technical impulse move back to the upside, okay, from injection of buy pressure from area sensitivity. For that reason, we're not interested in Aussie Yen. Moving on to Aussie Kiwi. Australian dollar negative 1.7, New Zealand dollar negative 0.6. Fundamental direction at the moment is to the downside. However, what do we know about the Australian economy and the New Zealand economy? What do we know? By the way, when I do this, I really actually want you guys to and girls to speak out loud, because what it does is it helps you learn. Okay, so Aussie Kiwi correlated, and because of their economies, right? They're significant trade partners. They have the same significant trade partners, especially China and Asia. Okay, because both of them are in the middle of nowhere, Australia and New Zealand. Okay, now when things are going good, there's more strength in the Aussie than there is in the Kiwi, because their economy is bigger. When things are going bad, there's more weakness in the Australian dollar than there is in the Kiwi, because their economy is bigger. So for you, wondering why the Kiwi's at a positive 6 and the New Zealand dollar, or excuse me, yeah, the Kiwi's at a positive 6 and the Aussie's at a negative 1, is because when things are not good, the Australian dollar is weaker than the Kiwi, and vice versa, because of the size of the economy. So our fundamental direction at the moment is to the downside. However, do we expect it to continue to the downside? Think about this. Critical thinking. Yes. Why? Because if the Australian dollar is seeing weakness, so is Australian. If the Kiwi is seeing weakness, so is Australian dollar, and vice versa. Right? So as the economies start to lock down, as the economic outlook starts to weaken, right, we're going to see weakness in the Australian dollar and weakness in the New Zealand dollar. But are we going to see more weakness in the Australian dollar? Yes. Okay, which means what? Our fundamental direction is to the downside, and it can be to the downside for the near term, near to midterm, because because of the correlation there. Okay, hopefully that makes sense. Okay, so here's our monthly upper zone, here's our monthly lower zone. Horizontal sell pressure, horizontal buy pressure. What's in between our monthly zones? That's our weekly upper, weekly lower. Okay, we're seeing a strong move off our monthly zone. Okay, what's important here is that we did not see an impulse move to the downside off our weekly lower, telling us that at this moment, tremendous amount of buy pressure and strength in the Australian dollar. So here we have a push to the upside. So let's think about this. Critical thinking, okay? We know that when the economy is good, Australian dollar has more strength than the New Zealand dollar. So what was happening here? Strength in both Aussie and Kiwi economy, even though there was weakness in the Kiwi compared to the Aussie on the charts. It's just due to the size of the economy. What's happening now? Weakness in the Aussie and strength in the Kiwi? No. Weakness in both. It's just Australian dollar is weaker than the Kiwi because of the size of the economy. Alright? Again, just trying to simplify things for you guys, okay? So what's happening now? We have sell pressure reaching buy pressure at our weekly lower zone. So if sell pressure is able to break buy pressure at our weekly lower zone, it has free range to what? Its monthly lower zone, assuming what? Fundamentals stay the same. All right, weekly time frame, we're seeing sell pressure test that buy pressure. Okay, here we go. What are we waiting for, team? Aussie, make a push to the downside. What's next? Exhaustion, price action, entry confirmation for continuational move. Team FXG, you're going to get an analysis on this pair, of course, including targets and stop losses, of course. Okay, so that will be coming later on today. Moving on. Swiss Franc Yen. Monthly time frame. All right, let's just clean this up. All right. Wrong color, but that'll actually be a good test. Okay, monthly time frame here is Swiss franc yen. What's our fundamental direction? Swiss franc's at positive 1.1, yen is at a negative 0.2. Fundamental direction clear right now is at to the upside. Why does this make sense? It makes sense because the Swiss franc is stronger than yen in terms of safe haven status. So when things are good, price is moving. When things are bad, price is moving up. When things are good, price is moving down. Why? Because when things are good, liquidation leaves. When things are bad, liquidation comes in. Okay? So we expect this to continue to the upside, even though the yen will likely gain strength. It doesn't necessarily, the Swiss franc will gain more strength than the yen, even though they are both safe haven status, right? Because the Swiss franc is stronger than yen in terms of that status. Here's our monthly upper, monthly lower, weekly mid-range. What's in between our weekly? What's after our weekly zone? Our daily. So here's our daily. Even though it is the wrong color. And that is 2. All right. So what have we identified? Area of sensitivity. Area of battle between buyers and sellers. That's all it is. Okay. So push, exhaustion, push, exhaustion. What's next? Potential continuational push. Okay. What would we need to happen to see potential entry? Well, if price breaks its daily upper zone to the upside with the push, okay, we will see an exhaustion, and then we will look for potential entry to the upside for continuational move to its next area of significant sell pressure, being its monthly upper zone, its next level of sellers, where buyers will meet its next level of sellers. Okay, and on to the next one. A little bit of a frozen screen. One sec. Little glitch there. All right, USD CAD. Monthly time frame. Cup and handle formation, who cares? Horizontal sell pressure from our monthly upper zone, horizontal buy pressure from our monthly lower zone. This is what? Higher time frame consolidation. Sorry team, my computer is being very slow. Okay. Apparently my CPU is overloaded right now. Okay, it doesn't matter. All right, horizontal sell pressure, horizontal buy pressure. Here is horizontal sell pressure and buy pressure, identifying our weekly upper zone. Here's our weekly lower zone. Okay, so what's our fundamental direction? USD is at a negative 2.7, the weakest of all pairs. Okay, and the Canadian dollar is at a negative 2.6. Fundamental direction is flat. Is the Canadian dollar going to find any strength anytime soon? No, right? Why? Because fundamental direction is what? COVID is spreading like wildfire, okay? Which means that it's going to affect the price of crude with supply demand. So in my opinion, we are not looking for entry. We're going to see a ton of weakness in the USD, flipping up and down. We're going to see weakness in the Canadian dollar following the economic outlook. I'm not into USD CAD right now, and we're moving on, okay? I smell trouble with USD CAD. Okay, USD Yen. Okay, what are we seeing here? Monthly time frame. Does this look good to us? No, it does not. Relatively consolidated, right? Even though Yen is stronger than the USD. Yen is acting as a safe haven, USD is not. We're still seeing a battle here on USD Yen. A battle, okay? And there's no clear movement, all right? And right now even though the US dollar is sorry, I forgot to screen share there. Even though the USD is weaker than the yen here at a negative 2.7, and the yen at a 0.2. Okay, again, when we look at the charts, does this look attractive to us? And I'm not talking about these movements over here. I'm talking about here. Is this attractive to us at all? Not really. Okay, pin bars, every candle has got a buy pressure, sell pressure. Every candle is within consolidation, it seems like, okay, on the lower time frame. Because remember, we're on the monthly time frame here. So for us, we're moving on from USD Yen. Don't like it. USD Swiss Franc, we won't be trading either, okay? But, well, actually, that's not true. USD Swiss Franc. make this clear. Let me not confuse you here. Okay, so before COVID, if you told me we were going to trade on USD Swiss Franc, I would tell you you're nuts, because USD and the Swiss Franc are correlated in terms of safe haven status. We know that the USD is not acting as a safe haven, and we can see that its weakness, its position as its number one safe haven, is gone. As you can see here, look, strong move to the downside. What does that tell us on the USD Swiss Franc pair? That there's weakness in the USD compared to the Swiss Franc. Now sell pressure is testing our monthly mid-range zone. And if sell pressure is able to break our monthly mid-range zone to the downside with the push, what does that tell us? Sorry guys, TradingView is sketching out on me right now. Okay, what does that tell us? Tells us that sell pressure is able to beat buy pressure, and this would have never happened pre-COVID. Okay, so what we're waiting for is a push to the downside, exhaustion, price action, entry confirmation for continuational push. This will only happen post-election. Okay, so we just have that on our playbook here. CAD USD. Okay, just like USD CAD, not interested. Why? We explained it with USD CAD. Fundamental direction is flippy floppy. Okay, and this is not just one of those pairs where you're okay with placing an entry even though fundamentals are kind of move up and down. This is a significantly sensitive pair to fundamentals. Why? Canadian dollar sensitive due to crude oil and the economic outlook of supply demand, and the US dollar, of course, as the world's currency. Okay, and we know we explained it many times. All right, so for that reason, we're not looking for entry on USD CAD. For the same reason, we're not looking for entry on CAD USD, especially leading up to elections. Okay? CAD Yen. Monthly time frame, Canadian dollar is at a negative 2.6. Yen is at a positive 2. Okay, so the Canadian dollar is weaker than the yen. Fundamental direction is to which direction? That's right, to the downside. Okay? So here's our monthly upper zone, here's our monthly lower zone. What's in between? That's right, our weekly upper and our weekly lower. Okay, so push, exhaustion, continuational push, failing to break previous low. That's as expected. Our monthly lower zone is a significant area of buy pressure, okay? So let's take a look at this. We're going to take it to the weekly time frame and pay attention to this move to the upside, all right? First off, what is this move to the upside? It's impulse move, right? Why is this an impulse move? We had a push to the downside, okay, reaching our monthly zone, okay. What is this? Buy limit orders, stop losses, take profits, impulse move to upside. What's next? Potential double confirmation if fundamental direction can send us that way. So our higher time frame flow is to the downside. Our fundamental direction is to the downside. So which way are we looking for entry? To the downside, because we only swim in the direction of the current. We do not swim against it. Okay, so here's that impulse move to the upside, and we're on the weekly time frame. How many times has price tried to break? So buy pressure tried to break sell pressure to the upside. Well, once, twice, 3 times. Okay, boom. Sell pressure has not let buy pressure break to the upside 3 times. Why is that? Fundamentals and also technical support to the downside from our weekly upper and our higher time frame downtrend. Perfect. So we know what? That tells us what? That our weekly upper is acting as a great sell support to the downside. Perfect. Okay, awesome. Like to see that. Now, what's in between our, or what I shouldn't say in between anymore. What I should say is what's after our daily zone. That's right, our 4H zone. So here on the 4 hour, we identified mid-range area sensitivity, right? Let's identify this. Horizontal sell pressure, horizontal buy pressure. Okay, as you can see, this is a mid-range area sensitivity. So let's simplify. And I want you to say this out loud. If sell pressure is able to break its 4H, buy pressure at its 4H mid-range zone, it has free range to where? That's right. It's daily mid-range zone. Perfect. All right, so what are we waiting for, team? Push, exhaustion, price action, entry confirmation for continuational push to the downside. Am I right? Yes, I am. Okay, so when we go to the 4-hour time frame, what are we seeing now? As expected, sell pressure is breaking what? Buy pressure to the downside, fueled by fundamental outlook. Push after, what's after push to the downside? And exhaustion to what? To the upside. Then what are we waiting for? Price action confirmation on the 4H. Then we take it to the 1-hour time frame for what? Entry confirmation before continuation will push to the downside. Perfect. Okay, so Team FXG on the gentleman markets, once we see a completion of this push to the downside, our analysis will go to yellow. Okay, in terms of traffic light signals, of course. And for those of you who don't know, who are new, red means red does not mean it was a losing trade. When you come on to the gentleman markets, you're going to see color code by every signal. Red means we're not near entry. Yellow means we're getting close, and green means we're in. Okay? Very important to understand. So, what are we seeing here? Before we leave Canadian dollar, I'm seeing a great educational example in this area right here. What can you all see here that I'm about to explain? Failure of double confirmation. Here is what? Strong push to the downside, right? Strong. Do we see any bullish candles here? Do we see any waves? No. What is this then? What is this? Impulse. Why? I'm actually saying this. I'm asking you guys because I want you to say it out loud wherever you are, okay? Buy limit orders. Buy limit orders, stop losses, take profits, market orders. Area of sensitivity at area, reaction at area of sensitivity. Impulse move to the upside. And as you see in this scenario, price did not make its way to its weekly upper zone as expected. Impulse moves usually don't. What happened next? Retest. Are we seeing a re-injection of buy pressure? No, we're not. Price is moving to the downside. So this is the power of double confirmation. A lot of people, and believe me, a lot of people, that's why we have an impulse move. Enter here expecting price to make its way and change direction when they don't understand that the impulse move, that the move to the upside from area sensitivity has nothing to do actually with the direction price is going to go. Only when we see another injection, a double confirmation after a significantly strong exhaustion, do we know then there's going to be a change in direction. So here's a perfect example as to why waiting for double confirmation is extremely important. Okay? So failure of double confirmation to the upside. Okay, a lot of the buy, anybody who is long, that's it. All the stop losses are being taken out as we speak. But we are not. Why? Because we're winners. Because we enter after proper analysis with proper money management. We focus on our win percentage. We enter at completion of exhaustion with price action and entry confirmation. We enter at double confirmation after a strong exhaustion because that's what Team FXG does. That's what a gentleman does. Okay, because we are about our winning percentage. We know the money will come. CAD Swiss Franc next. Canadian dollar, negative 2.6. Swiss Franc what? Swiss Franc what? 1.1. Strong, right? Even though I didn't give you the number, you have to expect it to be strong. Safe haven status, right? So Canadian dollar weak, Swiss Franc strong, which means what? Weak fighter, strong fighter, fundamental direction to the downside. Okay, on the monthly time frame here, as you can see when we zoom it out, there's a lot of movement here since 2009, but let's bring it into consolidation where price has been trading since 2015, okay? We have horizontal sell pressure, horizontal buy pressure. This is a push to the downside. What's after a push to the downside? Exhaustion. What's next? Potential continuational push to the downside. Now, this is providing something quite interesting for us, okay? This pair. Okay, and I'll explain why in a second. Can someone tell me the importance of what we're looking at right now? A little bit of critical thinking. Here's a push. Here's exhaustion. What's very important about continuational push? It failed to break previous low even though it had all the fundamental reasons to do so. And that's because of institutional and government support, okay? When we take it back to the monthly time frame, why did we see a massive collapse in the Canadian dollar, breaking consolidation since 2015? Why? The reason why is because when the virus was spreading, okay, we had the collapse in the demand for crude. Liquid went into safe haven status. So a tremendous amount of weakness in the Canadian dollar and strength in the Swiss franc. Okay, so fundamental or technical direction obviously was to the downside. Okay, so we had a strong move to the downside. Now, why did we see price make complete its push here and begin exhaustion? We have no monthly zone. We have no historical area sensitivity. We see the previous pins are entering higher than where price was. Why did we see the completion of the push complete where it was here, rather than just continue to the downside and collapse when there was a massive amount of weakness in the Canadian dollar and strength in the Swiss franc? Because of institutional and government support. I'll say this every time, okay? Countries have to hold debt. It is a strategic play. Too much debt is not good. Too little debt's not good. If you loan someone money, you want to make sure they definitely have money to pay you back. So as the Canadian dollar was collapsing, what happened? Any country that holds Canadian dollar bonds, Canadian dollar debt, is what? Supporting it with their institutional and government support, okay? So we have a push to the downside, exhaustion, and a continuational push. And price failed to see a lower low from the continuational push. Why? Because there's clear government and institutional vested interest that price does not devalue below this price. So even though our fundamental direction is significantly clear to the downside, are we going to see price trade and make new lows? Absolutely not, because we know at that previous low there's going to be government and institutional support. And if price was not able to break previous low at this continuational push when COVID was really bad here at our first spike, it definitely won't now. We know that this is a tremendous amount of support. So David, why are you saying this? I'm saying this because if we find an entry to the downside, we know that our final target must be at previous low, even though fundamental direction is so clearly to the downside. Okay, and we know that this will likely continue because as the virus continues to spike and lockdowns continue to happen, the demand for crude oil will collapse, which means that we'll see continued weakness in the Canadian dollar, continued strength in the Swiss franc. So what's our direction in the short, medium, and long term? That's right, it is to the downside. So it's very important to understand that we're not looking to enter anything unless it's we're not looking to go below our previous lows, is what I'm trying to say. All right, so we're on the daily time frame. Okay, we identified our daily upper, daily mid, daily lower zone. What's in between our daily zones? Our 4-hour zones, right? That's the next zone. So can I identify a 4H mid-range zone? And by the way, team, I want to explain to you. You might be saying, hey, Dave, well, if this was a scenario, why did we not look for an entry to the downside on this pair? Okay, well, I want to make this clear. At this level here, fundamental direction was actually to the upside. Okay, Canadian dollar is actually seeing strength. And when the fundamental direction is to the upside, you don't look for an entry to the downside, no matter what. Okay, so when we go to the daily time frame, what are we seeing now? Okay, sell pressure has to beat what? Our 4H mid-range zone. Let's change the color of this. Okay, sell pressure has to beat our 4H mid-range zone, and if it does, it has free range to what? Its lower zone. But where's our final target going to be? That's right, previous low, because we know price is not going to break previous low to the downside, even if it has all the fundamental reason to do so. Okay, so Team FXG, what's going to end up happening? We're going to have an analysis on this pair posted for the community. Okay, we're waiting for sell pressure to beat this mid-range zone with the push, exhaustion, continuational push. Okay, I'll be doing the signal today. I'll be posting the video analysis today. Okay, and of course we'll have our targets and stop losses laid out. Okay, so CAD Swiss Franc move to the downside. Now I do want to have critical thinking here. Okay, we have to make sure that we're critically thinking. What happens to this pair if Trump wins or if Biden wins on the election? Okay, well, if Trump wins or Biden wins, and that won't necessarily affect tremendously the demand for crude oil. So Canadian dollar let's leave that aside right now, okay? That's not really what it is. But what about safe haven status? Are we going to see strength in safe haven status if Trump wins, or weakness in safe haven status if Trump wins? Weakness, right? Why? Because economic stimulus. Because people believe that Trump is pro-economy, okay? They believe that as long as he's going to be the leader of the free world, he will always have the CEOs and the executive team's mind ahead, and companies' revenues in mind over anything else. Okay, so due to that, people may keep their money in the equities market if Trump wins. If Biden wins, what do? They liquidate, and then they put in to the Swiss franc, right? So why are we still looking to the downside? Well, because of the Canadian dollar. So even though if Biden wins and Swiss franc gets stronger because liquidity moves away from the equities market and into safe haven, even if that's the case, we know that the Canadian dollar will still see a tremendous amount of weakness. So even if that's the case, I'm still okay looking to the downside. I hope that made sense. I'm doing a little bit of critical thinking with you guys because, of course, when what I send out to you is what I'm trading as well. Okay, so CAD Swiss Franc, I'm still okay with an entry to the downside, assuming Trump wins. And of course, we don't assume, we react, but we have to make assumptions, of course, for our analysis, but we react. We don't place an entry based on assumptions, is what I'm trying to say. We place the entry based on facts and a reaction, but we have to do our analysis based on assumption, okay? So my assumption is, even if Biden wins and we see a tremendous amount of strength in the Swiss franc, we're still seeing a move to the downside. I guess that makes sense. Even if Trump, what I'm trying to say, sorry, even if Trump wins, I'm trying to clear this up in my mind. Even if Trump wins and we see money leave liquid safe haven status, so the Swiss franc weakens, meaning it won't have as much sell pressure to move to the downside, I believe we still will see that sell pressure due to the weakness in the Canadian dollar. There we go. I hope that made sense. I made it so much more confusing than it needed to be. Okay? All right. CAD Swiss franc. Moving on. Pound USD. All right. Pound at a negative 2.2, US dollar is at a negative 2.7. What does that mean in terms of fundamental direction? Relatively flat. So when fundamental direction is flat, we need to have significant technical direction. So let's see. All right. Here's our monthly zones. Let's identify where price has been trading since 2016. Okay, in between our monthly here and our monthly lower. Okay. What's in between our monthly zones or after our monthly placement? That's right, our weekly zones. So here's our weekly upper, weekly lower. Okay, so we identified area of battle. All right, let's take it to the weekly. Here's a push off our monthly zone, exhaustion. What's next? Potential continuational push. Are we going to see price break our weekly upper zone? Are we going to see buy pressure break our weekly upper zone? No, fundamental direction is flat. We need fundamental direction to be strong for the pound. Before then, we see buy pressure able to break with the push, and then exhaustion and a continuational push of price action entry confirmation. When are we likely going to see a confirmation either that price will be able to break or it won't be? Elections. That's right. November 3rd coming up. Okay. So as you start to see the theme here, a lot of waiting, patience. Okay. Pound yen. Pound yen monthly time frame. Here's our monthly upper zone, monthly lower zone. Push, exhaustion, continuational push. As you see on the higher time frame, as expected on many of the pairs, on almost all pairs, price fails to break its monthly zone to the downside or to the upside. This is a significant area of sensitivity, right? So what's in between our monthly zone? That's right, our weekly. What's next after our weekly zones? Our daily. So here's our weekly upper, our weekly lower. Here's our daily upper, daily lower. Okay, and for Team FXG, one of the things I want to say here quickly, one of the things that's going to be going on with Gentleman Markets is I'm going to start to do educational videos just for the team, okay? Whereby we go and we understand, like for example, one of the videos will be how to identify zones. The next will be how to identify downtrends. why bullish engulfing candle is significant. But what's really cool about this for the next phase for 2.0 is that when I'm placing an analysis, so when you see my signal, of course, you have the video analysis, then you have the written analysis. What's going to be awesome is I'm going to be able to, in the written analysis, when I say enter a price action or entry confirmation, maybe let's say you don't know it, those words will be linked. You'll be able to press the link and it'll take you to an educational video on what I mean. So if you are new to the gentleman market community and you see on the signals where on the comment section, okay, or you're watching the analysis and you're saying to yourself, what the hell does price action confirmation and entry confirmation mean? You'll be able to click that hyperlink and it'll take you to a video where it explains it. So I'm trying to make it to the point where if you do not understand even what a word means, you're able to then open it up and get an in-depth educational view on what I'm talking about. Okay, so that's what I'm. That's cool in my opinion. All right, so what are we looking at here? Very unattractive. Buy pressure pushing to the upside, right? We had to push to the upside. What's after a push to the upside? Exhaustion to the downside. We had a significantly strong exhaustion. Okay, exhaustion became a push. So what's after a push to the downside? Exhaustion to the upside. What's next? Potential continuational push. But what's our fundamental direction? Well, negative 2.2 on the pound, and yen is at a positive 0.2. Okay, so what are we seeing here? All right, we're seeing a weak pound. We're seeing a strongish yen compared to the pound, even though it's still a negative 0.2 compared to the pound, it's stronger. Okay, pound is weak at a negative 2.2. What's going to happen in the near future? Will the yen see more weakness or more strength? Likely more strength as the virus continues to spread and its placement as the second strongest safe haven status. So that means our fundamental direction is to the downside. Technical entry is only to the downside. If we were to find an entry to the downside, where would our final target be? That's right. Previous low, monthly lower zone. So let's take it to the daily now. Okay, here's that push back to the downside, exhaustion. What's next? Potential continuational push. Okay, Team FXG, you're going to have an analysis on this pair. I do see some lower time frame area of sensitivity. As you can see here, buy pressure, buy pressure, buy pressure. What are we going to wait for? We're going to wait for the push, breaking this sensitivity to the downside, exhaustion, continuational push. Okay, we're going to have an analysis on this pair, and of course our targets and signals will be placed. So that will be on the gentleman markets community under the signals. Okay, Pound Yen and Kiwi USD. All right, Kiwi is a positive 0.6, USD is at a negative 2.2. Fundamental direction is to the upside, okay? Which means our technical entry is only to the upside. All right, monthly time frame. Monthly upper, monthly mid, monthly lower zone. All right, what do we see here? Push to the downside, exhaustion, continuational push. Okay, we know that there's going to be technical and fundamental support at our monthly lower zone. Okay, so that's why we saw price move back to the upside and trade now in between our weekly zones. So let me make sense of this. Okay, in summary, what's the monthly telling us? Well, price here made a strong push to the upside. Buy pressure was testing our sell pressure not only at our weekly lower zone but also at our higher time frame downtrend. We failed to see an impulse move to the downside, telling us, well, tremendous amount of buy pressure. Okay, so that's what the monthly time frame is telling us. Okay, so as we go to the weekly, push, exhaustion. What's next? Potential continuational push. Where's this continuational push going to see its next area of sell pressure? At its weekly upper zone, right? So we know that buy pressure is making its way to sell pressure at its daily mid-range. Okay, then if buy pressure is able to break sell pressure at its daily mid-range, it has free range to where? That's right, it's weekly upper zone. Push, exhaustion, and then we're looking for continuational push at completion of exhaustion. Again, this will be a signal placed for the gentleman markets community. Okay, and of course targets will be placed as well. Last one for the day is on gold. All right, now gold. Here's the thing with gold. It is the #1 safe haven status. I got a question yesterday, good question. David, do you think that Bitcoin will replace gold as the number one safe haven status? And my answer to that question is absolutely not. And here's why. Problem with Bitcoin is there's actually no intrinsic value to it. The only value that Bitcoin really has is the perception that the market has of the value of Bitcoin. Okay? Gold has an actual intrinsic value to the property of gold. It is backed by actual physical substance that has intrinsic value. Now, there are some similarities to Bitcoin and to gold. Bitcoin can be bought and split into small pieces. Gold, you don't have to buy 1 ounce of gold every single time, right? You can buy gold into pieces. There's reasons why Bitcoin is acting as a safe haven like gold, but the main reason why is because gold is just overpriced. So anybody who would be pushing money into gold is now looking for other investments like Bitcoin, like Swiss Franc, or like buying bonds or other things like that, or even just holding money in cash. Okay, so what happens is this: as the price of gold starts to normalize, more money is going to leave Bitcoin and go back into gold. As gold starts to increase in price, more money is going to go back into Bitcoin because it doesn't make sense to buy gold at such a high price. Get where I'm going? But as far as Bitcoin taking over and becoming the number one safe haven status officially, it's a far away from that. And again, as far as I said that last live session, the biggest problem with crypto in general is the fact that the governments need to have control. The governments will never allow us to send money, to take money without taxing it and knowing where it's going or how it came in. That's the control. If the governments don't have control over currency, what do they have control over? Okay, so I believe that crypto will become a real worldwide, regularly used thing rather than just an asset hold when governments come out with their own crypto. And additional to that, it is important that governments have the ability to increase the value or decrease the value of their currency. It's used all the time. That's how Forex markets move. Okay, and the reason why is because they issue bonds. Remember, we said governments have debt. Now, why other than strategic reasons to have debt? What else can you do with debt? Right? Debt means that you're accepting money from someone else or another country in the belief that the deal that you pay it back over time, right? That's what debt is, right? When you get a mortgage, that's debt, right? You're getting money from the bank to buy a property, which then you pay over in installments. That's debt. Okay. What can a country do with debt? Well, they don't just take money and hold it, right? They take debt to what? Build roads, to stimulate the economy, to build high rises, to persuade other companies to start bringing it. It is a very important thing to stimulate the economy by issuing debt. That's what government bonds are. Okay? So when countries do not have the ability to manipulate the value of their currency to then issue debt, and to then increase stimulus in many different ways. There's 1,000 different ways of doing that we wouldn't be able to even cover. Okay? That's a problem. That's a problem. Okay? So, in my opinion, I don't know. I've never really been a Bitcoin guy, to be honest with you. And to be honest, and I just want to say this: there are people out there. I have one of my old business partners that is in that game and all that stuff, and good for him. And I just don't understand it. And he's a smart guy, so he's an exception. But I gotta say this: 90%, 99% of the people in the cryptocurrency market are scammers, are not knowledgeable. Do you guys remember when Bitcoin was going up to 20,000? When you logged on to Instagram, when you logged on to Facebook, how many advertisements did you see of, I'm a professional cryptocurrency trader, Bitcoin's going to 100,000, Bitcoin's going to 1 million, and then as Bitcoin collapsed, you stop seeing those ads, right? Because the reality is 90% of people in the cryptocurrency space are idiots, in my opinion. I'm not saying all of them are. I'm not saying. There's many people that made a lot of money that are killing it right now. Good for you. 90% of the people in that space are idiots. Okay? Not all, majority. All right? So that's my answer to that. But back to gold quickly. Okay? We know that gold made its way to close to over 2,000 an ounce, trading above history. We've never seen price in terms of the charts trade that into that level. So we know that gold is overpriced. That's why When price starts to make its way to this level, money starts to leave and go into other assets like Bitcoin. Okay, so we saw a push to the upside. Okay, we saw an exhaustion to the downside. Now this is a more reasonable buy. So what's going to happen? Money's going to go out of Bitcoin and into gold. And as gold starts to make its way to previous high, what's going to happen here? Money's going to go out of gold and back into Bitcoin. And then vice versa. So I believe we're going to see a new consolidation period here on gold. Okay, so that's it for today, team. I'm by the way, for the members of the Forex Gentleman community, please let me know in the chat room there on Gentleman Markets. Please let me know the structure. So this week I'm going to be building the structure of the David Dotan show. As you all know, when you start something new, it's trial and error. What's working, what's not. So I'm going to have different timetables in terms of, okay, when the David Dotan show starts, you know, okay, this is what we're going to start with. This is what's going to move on to next. This is what's going to move on to next. And then, of course, not everything can be out there for free. There are paying members that are paying for a reason. So we're going to have value for everybody. And then we're going to have even more value for the members on the platform. Okay, so that structure is being laid out this week. And your opinion and constructive criticism is much appreciated, because in the end, I'm doing this for you. And I want to know what you want, because in the end it is for you and you are the client. Okay, so thank you all. That's it for today's FXG Live. We've been now going live for an hour 41 minutes. Keep rocking, keep learning, stay patient. Elections are coming up, so do not put yourself in any position that you will lose sleep. Okay, and love you all. Bye bye.